Country road, take me home. Do-do-do. Mhm. Hello, Brandon.
Hey, what's up?
Well, I just got off a call with a lady. I won't share her name. Maybe I'll share it privately with you after.
Okay.
And she almost just got caught in a scam, coincidentally.
Oh, okay. And you got her
Yeah,
to
literally just
see
got
what was
off.
going on?
The girl you texted me with a while ago.
Nice. Okay. Yeah,
Um,
it's wild how like often people will show up and they're like right on the edge of like, I was looking at this one about to drop 50K in. I'm like, don't do it.
Yep. Yep. The only reason she didn't send the money, it was like $10,000, I think it was. The only reason she didn't is because she didn't have it liquid at that very moment.
Hmm.
So yeah, are we streaming this to the Zoom group or to the school group, or what's the plan?
You know what? I don't even know how to stream it to
Oh, really?
school. Is that an option?
I presumed it was. Well, I'm not connected now, so probably not.
Let me look into that afterwards, because if it is an option, that'd be super cool.
It's
Typically,
definitely not,
what we've
it's
been
definitely
doing is
possible.
just, yeah, we've just been providing the Zoom link and then posting the replay afterwards for everyone
Okay.
to, yeah.
Yeah, you can definitely stream. I'm pretty certain. I shouldn't say definitely. I'm pretty certain you can stream to the Zoom to the school group. Hello, Al. How's it going?
Very good. How are you?
There we go. And show me your dog, more importantly. Hello,
Oh
buddy.
yeah, Coda.
Ah, what a glorious dog.
Yeah, he's a gem.
Sheepdog? That's not a sheepdog. It is.
It's an Aussie Shepherd, yeah.
Yeah. Lovely, lovely. Cool. Well, look, I'm not gonna. We won't bore you guys too much. I am recording, I believe, Brandon. I am.
It looks like it, yeah.
Yeah, I am. Cool. I'm gonna take probably a completely different angle than you guys. And I made a big PowerPoint presentation, and then I was like, well, there's no point in doing a PowerPoint presentation because it takes away from what I do, what I think I do well, which is talk. Um, I was going through it, and I thought most people are going to be looking for, based on the title, more tools and more tactics to avoid garbage in crypto, avoid scams, avoid like how to lose their money, etc. And the more I thought about it, the more I realized that's probably not the right starting point. Because if I consider my journey in crypto, the probably hundreds of people I've talked to with regard to the crypto investors mastermind, and then thousands of people I've spoken to outside of that mastermind, just in business in general, most people, and I think we all will agree on this, most of us lose ourselves, lose our asses, not because we don't have the tools and tactics, but because we ourselves are the problem. And I have some notes up here, by the way, guys. So if you guys have questions, whatever, you can stop me. Um, in the last probably, I would say 4, maybe 5 weeks, I've spoken to various different people. They were not clients of ours, for anyone listening, just to be clear. One person lost $15,000. To him, a lot of money. To her, I should say, a lot of money. Another person, 300K. Another person, $500,000. I hope he watches this. I sent him the link. Another person, 300. And another couple, maybe 2 months ago, and this is significant. This couple were 66 years of age, 67 years of age, and they had a retirement fund of $1.6 million. And this is a true story, by the way. They took 1.4 million of the 1.6 and they gave it to XYZ company, and those funds are gone, obviously. Um, so my intention today is not to scare people, but it's to I suppose wake us all up, or try at least to wake us all up, because we all know there's an inherent level of risk, like with investing, as with life. And we're not in control of everything, but what we are in control of is one thing, and we all know it is personal responsibility. We're in control of our own behavior. And just to give credit where credit is due, most of the concepts I'm going to use today, they come from two people I've learned a lot from. Number one is Nick Peterson. He's part of the group, I believe. And then number two is Dr. Ben Hardy. He's a personal development guy, psychology kind of guy. So I want to start with this. And this is a parable I think most of us have probably heard to some degree. And I got it from Ben Hardy. He's giving me the refresher, but most of us probably know about it. And it's the Pied Piper. And so hear me out when I say this, guys, because it's going to have a lot of lessons, I think, as we go along. So there was if you don't know it, hear me out. There was a German town called Hamelin years ago. It's a parable, by the way. And there was a terrible plague of rats. So they were infested with rats. And the rats destroyed the town. Right? They devoured the crops. They were in all the houses. They just destroyed the place, right? And they tried everything. They tried cats. They tried poisons. They tried traps. They tried everything. And they couldn't get rid of the infestation. Okay. And if you know where this story is going, bear with me. One day, this strange man came into town, and he became known as the Pied Piper, right? And he promised the townspeople that he could probably get rid of the rats for a fair price. And they said they were so desperate, they said, "Okay, let's hear him out. Let's give him his price." Next day, he had a pipe or a pipe. Yeah, pipe. That's the word I'm looking for. And he started to play it. And it was this melody that the townspeople had never heard. And as he walked through the town, what happened? All the rats started to come out of the buildings, out of the nooks, out of the crannies, and they followed the Pied Piper down the road. He kept on whistling and took them to the river. And when they got to the river, he kept whistling until they all, one by one, fell. They plummeted, basically drowned in the river. All of a sudden, the town has no more rats. All of a sudden, the town can go back to normal, which is wonderful. Except the Pied Piper came back in the next day to get paid. And the village had all of a sudden, they'd forgotten what had happened, how bad the life was. They'd forgotten what they had needed the Pied Piper for. And they said, well, your work isn't worth that. And they gave him a fraction of what they had promised to give him. And he said, you're going to regret it. And they laughed, of course. A while later, the Pied Piper came back to not to collect his payment this time, but he came back with a different frame of mind. And while the villagers were all at church on a Sunday morning, he decided he's going to play his tune again. This time, as he's playing his tune, is more of a haunting melody. And all the children in the village, 130 boys and girls, they followed him through the village, out of the village, up a hill, and into a cave or a portal or something, never to be seen again. Where am I going with this parable, right? Or this story, I suppose. Everybody forgets. Everybody gets selfish. Everybody makes stupid decisions. And I think it's tremendously important to be cognizant of this as we move forward, as like it has so many parallels to crypto. We're always chasing more. We're always chasing 100x meme coin. We're always chasing $10 million, et cetera, et cetera, et cetera. And we forget the things that we've done on that journey to get there in the first place. Let me rephrase that. We forget the steps we have taken to grow our wealth in the first place. There's someone in my waiting room. Brandon, can you see my waiting room, by the way? Are you able to see that?
I don't think I can.
If I make you a host, just
Yeah, if you make me host, then I'll be able to let people in. That way you can focus on what you're saying and I can let people in.
There you go. You should be hosts now. Boom. So I think it's tremendously important to be cognizant, like as we move forward, right? Because whether you make the right decision or the wrong decision, there's no way around the fact that whatever decision you do make today is going to directly impact the quality of your life. But the decision the villagers made to not pay the Pied Piper massively impacted their lives. And I think it's a really, really good parable. I think parable is the right word. I don't know if it is. And sometimes we can hear stories of people getting lucky in crypto, and a lot of people do get very lucky in crypto, but most people don't. But when we hear about our friends or family or that story of the guy on Twitter who got very, very lucky, oftentimes we can be myopic in our own decisions. And when we end up being myopic in our own decisions, I think most of the time, not always, but most of the time, we end up making catastrophic decisions. Examples, those guys and girls that I told you a minute ago. And that couple that comes to mind, 1.4 million, they'd worked their tail off their entire life. $1.4 million. We can argue that the scammers took their money, but the reality is they gave their money away. And it's the really unfortunate reality. Okay, so we can be very, very aware of our decision making. Have you guys heard of that, by the way? Like the Pied Piper, you've heard of that story before, I presume. We've all heard of it? Thanks, Al.
Yeah, definitely.
Hello, AJ. So like, I think it's really important. So there's three things I want to talk about. I want to talk about the crypto gutter and why we fall in. I want to talk about the intentional intervention gap as it pertains to crypto. By the way, I got that from Nick. And then I want to talk about consistency over hype. So essentially raising the floor. Okay. And we'll probably take, I'd say 20, 25 minutes. If you guys have questions at any point, let me know. Unmute yourself, let me know. But again, please don't expect to get like tools and tactics today. I want to be, this is what I think is the most important thing. and I'll say this before I get started. Everybody asks me when I take calls for our mastermind. By the way, shameless plug, 50 to 100% per year is the average expected return, by the way, guys, on average. When I take calls, they ask, what's the biggest risk? And they're always looking for, you know, it's this thing or this thing and this thing. And the biggest risk, in my opinion, is always the person themselves, always, because we're the one we have to control. Okay, so just a side note, but the crypto gutter and why we fall in. So I think if we take this away from crypto for a second, and if we look at, I think that probably all of us are aware of, which is weight loss, fitness, right? Either you or your friend or your family member at some point in their life has been on track for their weight loss goals, their fitness goals, their fat loss goals. They've been on track. They've been doing very, very, very well. All of a sudden, they lose focus. All of a sudden, they lose track. They lose their way. And they can't seem to figure out why. And I think a great way to look at this is a bowling alley, right? If you've got the bowling alley, the lane in the bowling alley, and either side you got two gutters. Okay, we got the lane and we got the gutters. And all that person has to do to lose the weight is just stay on track. Not go too crazy to the left, not too crazy to the right. But all of a sudden, what ends up happening? All of a sudden, that person decides, hey, I'm not okay with a half a pound a week for the next year. Instead, I need to lose 20 pounds this month. And when they start looking for 20 pounds this month, what ends up happening, they inevitably will fall off the gutter, fall into the gutter. And once you're in the gutter in bowling alley, you can't get out. The game is over. And if we look at that as it pertains to crypto, like I think it's so damn important to have rules in place. Nick calls them bumpers. Have rules in place. Have bumpers in place. Have protection mechanisms. Because if we look at it in crypto, there's always the hyped project, right? Which oftentimes end up being rug pulls. There's always the 100x meme coin that you heard your friend get a hold of. There's always the fake airdrops. And essentially, I think most of these they're nothing but dangled urgency. And by the way, I'm not preaching. I was going to say I've been victim to this. That's not true. I made the decisions myself. But I have fallen for some of these myself in the past. I think most of us probably have, except Brandon. He's too smart for that. But in our quest for more weight loss, in our quest for getting there faster, in our quest for not being okay with being 15 pounds down, by the way, I'll give you some numbers that I actually know. And this is assuming weight loss is linear, which is not. If I want to lose 15 pounds this year, all I have to do is cut out 143 calories, give or take, per day, which is a chocolate bar. If I remove one chocolate bar per day for the rest of the year, I'll be down, give or take, 15 pounds. Is that a question or someone just talking?
No, you're good. I muted it.
So one chocolate bar per day, and I'll be down 15 pounds at the end of the year, give or take. But instead of being down 15 pounds at the end of the year, what do? Well, instead, I say I have to lose 20 pounds or 15 pounds this month. And because of that, I do something aggressive that I either cannot sustain, or I can sustain and then hate my life, and then I cannot sustain it from there, and I fall into the gutter. And all of a sudden, end of year, I'm not just not down 15 pounds, I'm probably plus 15 pounds. And so I wrecked myself. And in doing so, in wrecking myself, because I was chasing more, I set myself way further back. The couple who had 1.4 million, they're decades back all of a sudden. Their life is very, 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 very difficult now. Very difficult because they have no income to replace it because of their age. You know, I think that's tremendously, like, do you have any examples of that, Brendan, by the way?
Absolutely. And I mean, I've come across the same types of stories that you have. And often it takes the form of we want to go, like you said, we want to go way faster than we actually need to. So if you think about, 50 to 100% a year, split the difference 75% a year. If you actually got 75% a year compounded on average, year over year, compounded over 10 to 12 years, you would be doing insanely well. Like it's just, you'd be crushing it. But what happens is people want a lot more, a lot quicker. And so they fall for the thing that says, I'll get you, we'll triple your money every month, or, some of the kind of like ludicrous claims that are out there.
Since Brandon is talking about that, I coincidentally have this. I want to show you guys. Can you see this screen, guys?
Yeah, there you go.
So this is the exact numbers Brandon just said. Well, he didn't say these numbers, but if we look, and this is just a fictitious scenario, 10 grand invested over 10 years, and he's talking about 50 to 100% per year. So if we use 75 as the example, you can of course change the compounding frequency. I just have biweekly here and adding no money ever again. The numbers end up being 16 million in 10 years. Now, I want to be clear, we're not saying you'll have $16 million in 10 years. That's not what we're saying. But based on the numbers, if we were just okay with not getting to 16 million tomorrow, we would be way further ahead 7 years from now, 8 years from now, 10 years from now.
Yeah.
Just as a I think it's a key note. I think it's tremendously important.
And if I could just add one thing, one common thread that I always see for people who fall victim to these kinds of scams, they're operating, even if only for that moment, it might not be like a trend for their whole life, but for that moment of decision, they're operating with like an all or nothing kind of thinking, which is, I mean, if you think about it, if I had 1.6 million and I got approached by someone in a WhatsApp chat group, would I put 1.4 million in there? No, I'd probably put like 10,000 and then wait a year and then see if I can withdraw it. You know, so there's a lot of room for error when we get caught up in the all or nothing thinking. And by all or nothing thinking, I just mean like, wow, this is such a cool opportunity. I'm going to put everything I have into opportunity X.
Here's a question, by the way, to like if we piggyback off what you just said. So if we appreciate when bad things don't happen, like the gains in crypto are so already monumentally outsized to the real world. If we just appreciated the fact that the returns are so great, we wouldn't need, we could realize, wait, we don't need to chase whatever's being presented in front of us.
Yeah.
Like the returns are so monumentally great in comparison to what most people are aware of, or used to, I should say. Like that's a question we should be asking. I don't need to get there tomorrow. I don't need to get there tomorrow. And I think most people watching this and in this world, they do have a shot at what I would consider to be a wonderful life from a financial standpoint, at least. But I think the big thing is having the ability to at least consider, you know, why we're probably currently off track. And when we consider why we're currently, when we know why we're currently off track, then we can begin to take the steps to get back on track. There's a gentleman who I know is going to watch this call. I spoke to this week. I won't share his name, of course. He's maybe late 40s. I can't remember the exact age, but he's a perfect example of someone who's tried his entire life to put his family in a wonderful position. And kudos to him. He's doing great as a dad. His intention is to do great as a dad and as a husband. And when we sat and thought about it, the reality was he didn't actually know what he needed. He didn't actually have any steps to get there. He could have, for all we knew, already have hit his financial goal. But even if he did, he didn't know because he had no problem to solve. He didn't know where he needed to get to. If you don't know where you need to get to, you can't take the steps to get there. Just as an aside, which, by the way, brings me to, by the way, I'm curious, for those guys watching now and those guys who watch the replay, if you have fallen for anything, there's no judgment, by the way. If you have fallen for something scam-wise or been approached, I'd be curious to know in the chat. I'd be very, very curious, actually, because it's useful for us to help people going forward. That's number one. Number two is the intention intervention gap. This is one I learned personally from, it's so blatantly obvious. I learned it from Nick, though, Nick Peterson. Intention intervention gap is, if you don't know, the gap between what we plan to do and what we actually end up doing. And so we might say, hey, I'm going to avoid hype. But then 20 minutes later, we're in the Telegram channel of XYZ coin and we're listening to all these people talk about, you know, hype. We're listening to all these people who are going to say our bags are going to be XYZ dollars or XYZ market cap, etc. And then we go about calculating how rich we're going to be. I have done it, by the way. An example that I think is really important would be, or really useful, would be, I need to be a millionaire by the time I'm, say, 40 years of age. I need to be a millionaire by the time I'm 40 years of age so that I never have to work again and my family can be looked after. Okay, fine. And let's say I'm on track for that, you know, $7 million, or whatever the number is. I'm on track for it. But I'm not on track by the time I'm 40. Instead, I'm on track by the time I'm 43, 3 years later. And I think most people would agree and argue that's okay. I'm okay with being completely free financially by the time I'm 43, not 40. We got to be aware though, scams thrive in the gap. And if we consider what the gap would be in this case, you might see a moonshot on Twitter or on Facebook or something where someone talks about how you can all of a sudden get to your $7 million in the next 2 days, 2 weeks, 2 months, this year. And what you had already was a plan to get you on track by the time you're 43. And instead of being okay with that and trying to rush and trying to chase more, what do we end up doing? We end up risking what we've already built, what we've already worked our tails off for. And then all of a sudden it goes to dust. And again, I go back to that couple, $1.4 million. They worked their entire life for it. Their entire life for it. And by the way, for those who are watching who $1.4 million sounds like a tremendous amount of money, I don't disagree. It's that. There's others who have taken 200 grand, 100 grand, 300 grand, 500 grand. For them, a tremendous amount of money. And the same thing applies. They're always trying to retire by the time they're 40 years old. I'm making that story up, of course. And if they were just okay with it taking 3 years longer, their families would have been safe. Because that's what most people are doing. And if I'm rambling, by the way, please stop me, guys. That's what most people are doing based on my conversations. I just want to be more comfortable in retirement. I just want my family to be safe. I just want to not worry in retirement. Insert examples such as that. And then all of a sudden, our actions are completely opposed to what we say we want in the first place, simply because we're not exactly where we thought we should have been. And should obviously being a dangerous word. We're not exactly where we thought we should have been, and we started looking for more. And again, I go back to what I just said. Scams, they thrive in the gap. They thrive in what you don't have. Let me rephrase, what you think you don't have.
Yeah, and again, if I could just interject,
Yeah.
The other common thread I often see is the person who gets caught up in these scams. They don't want to do anything. So their mindset is, I don't want to learn anything new. I don't want to take any effort or action. I want someone else to do 100% of it for me. Now, I understand, like, especially as a business owner, like there are ways to leverage what you do, right? To say like, hey, I don't want to do everything. So let me kind of scatter and delegate and, bring on a team and all this kind of stuff. But it's a form of all or nothing thinking when you just say, well, I don't want to do anything. I want someone else to do all of it for me. And that, just human psychology wise, that's what these scammers prey on, because they know there's a lot of people out there who aren't savvy to the crypto space and who have no desire to become savvy and learn it. And that's one of the reasons why in the Mastermind, we do heavy emphasis on education, on empowerment, on teaching how to analyze and view the market and how to make decisions and variables and, asset selection and all this kind of stuff. Because we actually don't want people to remain in the dark about all of the considerations that come into play in the crypto market. And it's the folks who just flat out say, I don't want to learn anything. Oh, look, here's someone who I can just hand my Bitcoin to, and they're going to take care of everything for me. Well, that's like putting cash in an envelope and handing it to a complete stranger and going, okay, yeah, come back in a month and give me back my profits, okay? They're not going to do that. They're going to take the cash in the envelope, they're going to leave, and they might even string you along a little bit asking for more cash. Like, oh, if you just add a little bit more, then I'll give you your cash back. And so that's one of the most common threads, because again, it's just playing on the human tendency to want to put less effort into something. And I would argue that's the exact opposite of what we all could or should be doing, which is, hey, there's this new thing, there's this new market, the opportunity is incredible. Let me actually put some time and effort. It doesn't have to be a ton of time and effort, but even if you're willing to put in like an hour a week, well, after a year, you're going to be light years ahead of 98% of the population because you've taken the time to actually educate yourself. So anyway, for what it's worth, I would just say keep an eye out for that tendency within yourself, because I'm human too. It happens to me all the time, and I have to constantly like keep myself in check.
There's two questions I get asked all the time, by the way, just to piggyback off what you're saying. And it's, if this is so good, why isn't everybody doing it?
Yeah.
And the answers to that, there's a lot of answers to that, but if I just use what you just said, Brian, that's like, there's work required.
Yeah.
you're not getting rich, or insert term there, without doing some sort of work and taking personal responsibility. I'd like to talk about that in a second as well, by the way. But the second question I get asked all the time is, if this is so good, why wouldn't I invest more money? Why wouldn't I invest all of my money? And I think the answer, we've been talking about it this whole time. A, what Brandon just said, but B, you probably don't need to. Like, and if we look back to the calculator I had up a second ago, it was 10. And again, I'm not saying you'd have $16 million in 10 years, guys. You might, but I'm not saying you will. $10,000 compounded year over year over year at 75% on average, it was 16 million. Well, if we take those numbers and look at them to be true and accurate, which we can show, the reality is I don't need to take my entire family fund. I don't need to sell my house. I don't need to take my entire retirement pot. I don't need to do it. There was a lady just the other day. We had a great conversation. She's going to enroll in our mastermind, by the way, but she has 400,000 in a XYZ fund I won't tell you about. And she's like, I want to wait until that's ready to liquidate, and I want to put it all to work. I was like, well, you don't need to do that. That's okay. Leave it alone. It's getting a great return. It's getting a great return. Leave it alone. Take 10 grand, take 20 grand, take 30 grand, whatever you're comfortable with, and you'll be okay. Because in my opinion, you have to, like, you can risk so much less here and get the outcome as opposed to the real world. So you don't need to play with more. When you feel more comfortable, sure, make your own decisions. I just think that's really, really important.
It's critical, and it's just another form of all or nothing thinking, right? Is, hey, I've got X to play with, I better put it all into this one vehicle. And I would say, like, I don't even do that. I have crypto on this side, and then I have over on the other side some long-term, like, whole life policies, which are probably only going to average me maybe 3%. Like, it's barely going to beat inflation, but that's like my, hey, when I'm 90, I'll cash this out if I'm not already gone, by that point. But there's like this interplay between types of investment vehicles. And to your point, you don't have to put it all into one place. And if you're operating in an environment with outsized returns, like higher risk to reward ratio, then you can play with smaller amounts and still enjoy over the long term really incredible returns.
Time horizon being the key. And there's another piece to that, by the way, which is the answer to the question of why you shouldn't invest more, or why you might not invest more, is because you're human, and humans are typically very, very fallible. And I think probably the one of the best investment vehicles on the planet is, I'll say it to you differently. The best investment vehicle on the planet isn't going to work if we can't hold up our end of the bargain. And if I say it more eloquently, we cannot be saved from our own sloppy behavior. And the more money we have in play, the more likely we are to get emotional, and the more likely we are to make stupid decisions and get away from our bumpers, our rules that we talked about a few minutes ago. Yeah, I think that the best investment vehicle is understanding ourselves and not allowing ourselves, or doing our best to not make stupid decisions, doing our best to not put ourselves in positions that sabotage ourselves. I'll give you a personal example from, if we go back to fitness, if we could, because I think it's one everyone understands. There was a period of time for me where I had a habit of, I'm on track, I'm sabotaging myself. I'm on track, I'm sabotaging myself. And the problem was obviously me. Cool. How do I, like what bumper will I put in place? Well, the bumper I put in place was I removed access to money. I deleted all the cards from my app, and I took all my money from my bank and I sent it to my wife. Don't have it. And so I don't have access. So I removed the chance, or reduce the chance of me making a mistake and getting my own way. And it's an extreme example. I'm sure many would agree or would argue, but the point is I know myself and I know where I'm going to mess up, where I'm more likely to mess up. Apply it here. Speaking of, I talked about bumpers a while ago, and raising the floor. Again, this is one that I learned as part of this whole network. Okay. And raising the floor is so damn valuable, because I think actually, Brandon, what I'll do is I'll share my screen again. Let me just pull this up. I think this will be useful for a lot of people, actually. While I'm sharing this, I'm going to give you guys a story, a personal story. The last crypto bull run, had I made two decisions differently, these are real numbers. Had I made two decisions differently, I may have been in a position to liquidate about 30 million. Now, whether it would have worked out exactly that way or not, I don't know. But if two decisions differently, that may have been the outcome. But the reality is I didn't actually know where I was going back then. I didn't even know what I wanted. And even if I knew what I wanted, a big thing would be, okay, I don't have a plan in place to get there. I'm going to say it too differently. Farming was something I was aware of and something I was very actively involved in at the time. What I didn't have was a way to get to my 30 million or 10 million or 20 million in 6 months. And had I been not greedy, like the Pied Piper story, had I been not greedy and I step back and say, wait a minute, I can get there in 6 years, I would have been probably better off. I would argue I'd be better off taking 700,000 off the table or 500,000 off the table or 1 million off the table last time rather than waiting for 30 million. But I want to share my screen because I think it's really important. I'm not the only one who's done that. I know that. If I share this screen, can you see this, guy, Brandon?
Yep, looks good.
This is the exact numbers we talked about a second ago. The $10,000 over 10 years, 75% returned, compounded. I think it was bi-weekly we had. Okay. I think this is so damn important. Obviously, we all know the end result was 16.2 million. We all know that. But what very few people look at is how we actually got there. The 10 grand end of year one was 22 grand. Or 20 grand, I should say, then 40 grand. So it's a double give or take per year. And it doesn't really start getting interesting until around year 6, maybe year 7, depending on what you think is interesting from a number standpoint. If you look over here to the right, I'll try and zoom in. Yes, I can zoom in. Look over here to the right. This is year 0. You literally cannot see any growth. It's completely irrelevant. And then all of a sudden, there's a hockey stick. All of a sudden, it's outsized. Simply because we understood that we need to be patient. We need to be patient. And again, anybody who's telling you, I can get you X, Y, Z. Another example, 15 grand. I think 3 days later, this lady thought she had 300, but was wondering why she couldn't withdraw it. And she had to wait XYZ time to withdraw it. It's not real, Brandon. It's not real. And it's just another example of when we chase more, we typically make mistakes. But if we actually zoom out and look at that chart, that compound interest chart, everybody looks at the start number and the end number, and nobody looks at what happens in between. And when you pay attention to what happens in between, you'll realize, wait a minute. I'm at risk here by not being aware of how this all works. Because if I know how this all works, I can make decisions based on my own personal disposition. I can just I can tune out. I can tune out. Hopefully that makes sense. Someone's talking about diversification here in the chat. Scott is. I think that chart is so damn important. I think it's so damn important. If I go back to the 30 million example that I had, maybe we don't need to get the 12. I'm saying the same thing, by the way. Maybe we don't need to get the 12.5 million number the first time round. Maybe we can just lock in a few $100 grand to put our family in a better position. Okay. As the saying goes, Rome wasn't built in a day. It was gradual. It was probably very, very, very painful. But over time, it became this behemoth empire. An example that I personally love, by the way, is the gold rush, however many hundreds of years ago, 200 years ago, whatever it was. Most people are aware that in the gold rush, the guys and girls who made the money, most of the money, were not necessarily the ones gold mining. It was the guys who provided the tools. Again, okay, we know the story at a high level, but most of the time we don't go a layer deeper. What I'm going to say next may or may not be completely accurate. We'll see. I would argue the reason the guys who made most of the money were the tool providers is because A, they never put their lives at risk. They never put their lives at risk by getting into a mine. At crossover to crypto, we never put our entire fund at risk. Okay. Number 2, they never had to win big ever. They never had to strike it big because they had all these little gold miners getting tools from them. And the reality is none of the gold miners could have needed to win, I should say, for that tool provider to actually win. And the even better part is when inevitably one of the gold miners did strike it big, what do they need? They need more tools. So that person protects themselves by not putting their lives at risk. They hedge by never having to win ever. And if by chance somebody does win, they get outsized returns. And that's really what we're trying to do in with yield farming in the mastermind. Position you, help you to position yourself. We don't position you, help you to position yourself so that you don't wreck yourself, so you don't lose your entire your retirement fund, family fund, whatever you've worked for, and put yourself in a position to win in the ups and the downs. And when you can do that in a, I suppose, predictable fashion, which is what Brandon teaches, by the way, you're probably going to win. Not tomorrow, definitely not going to win tomorrow. But then we can argue that if you're not losing tomorrow, you're winning. So there's a lot of arguments there. Am I accurate with the gold mining, Brandon? Would you agree with that?
I would agree 100%.
Yeah.
And the thing I put in the chat there, incremental wins over time, that's to me anyway, that's the game if you want to play in like a hedged environment. So I get that there's people who say, no, I'm just going to buy a bunch of crypto and then like hold it for a few years and then sell it. You know what? You'll probably make money. I can't argue with that. Like just buy Bitcoin and hold it for 30 years. You're probably going to come out ahead, right? We're just saying if you want to add like some layers of profit opportunity, but you want to do that in a hedged environment, here's one tactic, yield farming, that would facilitate that. But again, you have to know what you're doing and you got to know that it takes time. What happens is people see something like, oh, 100% APR, and they get excited over the 100. And they don't realize that that is only 0.27% a day on average, right? So if every day was exactly the same, which it's not, 0.27% a day. So some days you get 0.5%, some days you get 0.4%, some days you get 0.1% or 0.08%. And those are the days where you look at your portfolio and go, this isn't moving fast enough. But if you were zoom back out, go, actually, I'm exactly on track to hit my target range of return, 50 to 100%. And I'm okay because I'm playing in the more reliable side of crypto rather than searching for a way to 10x my money over the next 30 days.
There's a good real life segue there, I think, and it's one that I like to think about. It's one that everybody's aware of. If you sit in your local Starbucks or coffee shop or whatever today, and this is not crypto related, if we sit in the local coffee shop and you'll see 1,000 people go in the door, 1,000 people go in the door, the credit card companies collect a lot of transaction fees.
Yeah.
If that same Starbucks is beside, say, a big stadium and there's a game on tomorrow and 50,000 people walk in the door, well, they collect a hell of a lot more transaction fees. And the distinction that I like to look at is they took a lot less risk than the store owner because they don't have the store, they don't have the rent, they don't have the hundreds of staff, they don't have all the people to manage, yada, yada, yada. They're just the person in the middle collecting the fees. And so for people who are wondering, why does yield farming work? Well, you're providing a service. The credit card company provides a service, or the merchant, I suppose, provides a service for us to transact, to buy the coffee. In crypto and yield farming, you're the one who has both sides of the equation. You have the coffee and you have the dollars, and people transact with you. And because you provide that service, you get a significant upside, in my opinion. I just think it's useful to look at it from real life perspective sometimes, because people have a difficult time, me included in the beginning, by the way. People oftentimes have a difficult time wrapping their head around how crypto works. You see this all of the time. You've seen these returns all of the time too. You just haven't had access to them. That's how I look at it, at least. And the credit card company isn't sitting back, like Brandon said, and wondering, hey, I only got 0.2% today. No, 1,000 people are going to go in every single day. And if tomorrow 50,000 people go in, great. I just got closer to where I wanted to go. But we let it compound. All of a sudden, the credit card company is filthy rich.
Yeah, it works the other way too. Like I have to pay. So I mean, I use Stripe as my payment processor. They take 2.9%, which is insane if you think about it. And every time a transaction goes through, it's like, oh, it's a couple $100. That sucks, but like no big deal. Then when you go back at the end of the year, even 1 year, and you look at what 2.9% actually amounted to, you're like, what? They took so much just off the top line and they're just like making bank. So anyway, the point of all of that, not to gripe about Stripe, but rather to say when you provide a legitimate service, in the financial world, and now in the decentralized financial world, there's an opportunity to put yourself in that flow, that energetic flow of money, because money is just changing. It's just constantly moving, changing hands back and forth, buy, sell, whatever, trading. And some people are just strategic enough to put themselves in the midst of that flow and collect a portion of all those transactions.
Yeah. I think it's I think a good way to finish, I've lost my train of thought a little bit, by the way, but a good way to finish would be understanding that these returns, maybe not these exact returns, but outsized returns have always existed. But I don't know if I'm accurate when I say this or not. Accredited investors have always had access to phenomenal returns, but they are considered responsible enough to take ownership if they make mistakes. And so they get access. General population, us, don't typically get access to those things because we typically want someone to blame. This goes back to what I said at the top of the call. Instead of looking for like what is the tool and tactic to avoid a scam, let's look internally. The reality is it's probably not out there. It's most likely in here. I must be, because I'm in crypto, because you have no choice but to take responsibility for the upside or the downside, you get access to returns that are outsized. And most people, this goes back to what I said earlier, why isn't everybody doing this? Most people aren't responsible. Let me rephrase. Most people won't take responsibility for their own circumstances because they want someone to blame. And that's fine. But if you're willing, you have opportunity. That's
Yeah,
my,
and I would agree. And I would say one of the manifestations about not wanting to assume radical responsibility is the tendency to look for who will do it all for me.
yes,
And that immediately makes you extremely vulnerable
yes,
to all of the scams that are out there, because all of the scams they're emotional in nature. So that's why very intelligent people can fall for these as well. And people who fall for them, they always tell me, "Oh, I feel so dumb. I feel so stupid." And I'm like, "Well, it's not that you're unintelligent. It's that they know human psychology so well. They know which button to poke to get you to operate in that irrational mode, right? Where all of a sudden it doesn't matter how intelligent you are because you're operating with FOMO and fear of loss and consistency bias, all of these things that are like well documented. Like you can read what's that book, Influence by Robert Cialdini. You can read just that book and go, holy cow, like
yeah.
they're using all six of these. Like when you understand it and you look in reverse, you go, oh man, that scam I just fell for. They used all six of these cognitive biases. That's why I fell for it, because these are predictable biases that exist in every human brain.
Yep. I'd like to end it on this note, unless people have questions about it, Brandon. If you want to jam, no problem. Uh, I think this is really important, and I base this off of most of the conversations that I have. You don't need to get rich tomorrow. You can have a fantastic life, in my belief. We can all have a fantastic life, in my belief, but we don't need to get rich tomorrow. And you probably don't know all the answers either, by the way. Otherwise, you wouldn't be here. And if we know those two things, it will probably equip us to be more capable of making rational decisions, or more rational decisions, I should say. Um, and lastly, often people say to me, "Hey, but I can time the market. I can buy low, sell high. I can this, and this." And sure, you can. But the reality is the chances of you timing the market are so slim, and they're slim and none really, that you time the market. And so I would
You
argue
only know
that,
in retrospect the exact timing.
yep, yep. So I would say this, and this is what I would say is, get started. Do not risk the farm. Get started, but be intelligent and be patient.
Yeah.
Brandon says the patient investor. I love it. Like, be intelligent, be patient, and ultimately be aware that your biggest risk factor, again, I've said it already, your biggest risk factor, our biggest risk factor is not out there. It's in here. It's us. We are our biggest risk. And getting around a group of people, I think, who are on a similar, rowing in a similar direction is usually very, very valuable. Um, if you knew how to do it, you'd be there already.
Yeah.
That's my
Yeah,
take
good
on
call.
it. Again, I know people were probably expecting tools and tactics, but I don't think it's valuable right now. We need to be aware of the number one problem is ourselves, because I see it all the time, all the time. Um, Yeah. What are your thoughts, Brandon?
No, I think I mean, you're spot on. You know, it's like the tactical stuff that's constantly changing. And I mean, I've seen some scams that look super elaborate on the front end. I mean, I've been around the block now enough to just like immediately, like you'll often send me a link, right? A website link.
The other
Like,
day I
hey,
said she would look
yeah,
so
so
legit.
so and so wants to get involved in this. And I'm like, just based on the URL, I can tell you it's probably a scam. And then I'll open up the website, and within 7 seconds, I'm like, this is 100% a scam. Like
Well, can I
it's so
piggyback off
obvious.
that? Just this
Yeah.
might be a good little like I don't know the word for this by the way in psychology terms, but that particular person didn't believe me, so I said log in. Like she shared her screen with me. I said log into your account. She logged into her account. I said show me your portfolio. Here's her portfolio. It's 300,000, 327,000, I think. Show her, cool. Withdraw it. Try and withdraw $1. She's like, I can't. Why not? Well, I've signed a contract not to withdraw for X amount of time. That doesn't really make sense now, does it? And then from there, obviously she got bad news. That's bad news. It's not nice to hear. Very bad news, in fact. She thought she had 300 grand and she didn't all of a sudden. And it was very interesting to watch. It was actually quite upsetting. She had her screen shared and she's moving her mouse around. Yeah, but and couldn't wrap her mind around the fact that she's been duped. And it's really unfortunate. I don't know what the psychological term there is, by the way, but just be aware
I
that
don't know the term, but you may have heard this little lyric in the past. It is easier to fool a man than to convince him that he has been fooled.
it is easier to fool a man than to convince him he's being fooled. That's exactly what happened.
Meaning, and this I think it's probably like just an extension of consistency bias. Like I said, by the way, if you guys haven't read Influence by Robert Cialdini, read that. It's just like 6 human biases that factor into how we are how we influence others and how we are influenced by others. And consistency bias is the one where we tend to make subsequent decisions based on how we made previous decisions. For whatever reason, that's like a psychological protection mechanism. And I don't know if it has to do with identity or what, but it's like, oh, well, I made this decision to invest this money, therefore it must be real. And the only way that I can admit that it's a scam, a true legit scam, is I have to go backwards in time and also admit that I made a really terrible decision in the
Which is
past.
hard to do. Very
And
hard to
that
do.
is so hard to do for people to just openly go, I made a bad decision. I got scammed. I was a victim of this thing. Like just admitting that is so difficult psychologically because our tendency is to want to protect ourselves and protect our ego and save face.
Yep. Uh,
Which
yep.
is
And
why the Nigerian prince scam works. And all of these are just they're all a version of the Nigerian prince scam. I had a friend reach out to me recently with an investment opportunity, and I was like, "Do you know these guys personally?" No, it's, I heard about it from a friend and this and that. And basically, the whole premise was, you were going to invest in this other. I don't want to get too far into it, but the point was, I went through it and I even met with the people on a Zoom, and all I could think the whole time was, this is Nigerian prince. It's just wrapped up in different clothes, but it's the same premise. There's like some extreme wealthy benefactor in the background who just wants to bless you with abundant monies and you don't have to do anything to earn it. And that's what all the crypto scams are too. Hey, there's this really cool company that all you have to do is give them all your Bitcoin or USDT. They're going to do all the work for you and they're just going to give you all these profits and you don't have to do anything for it.
a piggyback, not the same, but similar, just popped into my head. Most of the time, when we go to make an investment in a coaching program or a whatever, most people, to some degree, will want to sound intelligent and say, I need to do my due diligence. No problem, by the way. I respect that. But you won't do your due diligence about this. Not this, the Nigerian prince or the insert thing. Why? Because they've got it's human psychology. Like our own sloppy behavior is the reason we're not where we want to be. All of us. I think that's probably the most important thing today, in my opinion. Like our own sloppy behavior is the problem.
Hi
Uh,
guys,
What's up, AJ?
Hi. I just wanted to just add to that. I've gone through that exact same situation that was described in terms of the scam. And what's funny is there was two things. One is I did kind of realize that I had been scammed, but when I tried to get my money out, and they said not so fast. But what I did is he said, put another 1,500 in Bitcoin will enable us to release. And I'm thinking, this is a scam, but no, wait, I need that 40 grand that's sitting there with my name on it. So what's another 1,500? And this happened 3 or 4 times. And so I was unwilling to listen to my own voice. It was so, and the second thing is, Brandon and I have talked about me joining his mastermind, and I always say to myself that I can't afford it right now. But I've lost 10 times that amount, in scams. So it's just amazing how our mind works when it comes to the willingness to spend on certain things.
Question for you, and I don't know the answer to this, so it's for people who do listen to this. Um, and by the way, thank you for sharing. It's very, very useful. When you say you're considering joining the mastermind or another mastermind, whatever, but concerned because of the money involved. Okay, fine. Is it because whatever scam you fell for was promoting, AJ's gonna have $1 million tomorrow, versus we're saying you have $1 million in 10 years?
I think no, it wasn't that the patience part I get totally.
Okay.
What it did to me is that after the two scams, I just said no more crypto. I was so once bitten, 100 times shy.
Interesting.
And so I completely walked away from anything crypto or NFT or anything to do with decentralized DeFi. It's just that now I'm slowly starting to come back in because I still believe in the underlying premise and the underlying technology. And that's why I wanted to join this call. But yeah, I don't doubt the 5 or 10 year time frame to get a return, because I realize that that is the wiser way to go about it.
You know what you're saying though, for those who do end up listening back to this, you've just described, and I really respect you sharing. You just described that kind of having, I suppose, a reactive narrative to our past, or to your past in this case, poor decisions, which we've all had, by the way. This is not me judging or preaching or any of the above. That reactive narrative about our past ended up just sabotaging us completely. And I think, and I could be wrong when I say this, Brandon, so please correct me if I am. I think a simple way to look at yield farming is if you play with blue chip assets. So I'm just going to put, for people listening, let's say the top 20 cryptos, just to keep it simple, okay? The top 5 cryptos, okay? And you look at the top 5 cryptos, okay, they're probably not going anywhere. They might, but they're probably not going anywhere. And how does yield farming work? Well, you collect trading fees. Just go look at the trading volume. The top 5 cryptos mean there's a ton of trading volume, which means people, for anyone listening, people buying and people selling those assets. And so therefore, so long as you custody your own assets, which for anyone listening means you control it, you give it to nobody else but yourself and or someone you trust inherently, you're probably going to be okay. Doesn't mean you'll get the exact returns we talk about, 50 to 100% per year on average, but the point being you can collect fees. And you don't need to be a rocket scientist to see, wait, these assets are being traded, somebody's collecting fees, it may as well be me. That's just one of my lenses.
No, that's how I've understood yield farming to be as well. I did get into yield farming some time ago, and I think I had communicated with Brandon about it, and it didn't go my way. Again, I think I had sort of forgotten about it, and by the time I came back and looked at it, most of the value was gone. I think it was the wolf one, Brandon, wolf with it had the word wolf in it. I think it was you know what I'm talking about, which coin.
There's an asset called Wolfies, yeah, if that's the one you're talking about.
Yeah, but no, it was something that I think I heard from you first, but another friend had told me that it's a good thing. I went with it, and then I forgot to monitor it or whatever, and then when I came back, it had lost all its value. So yeah, Wolf's Den, I think, or something. So anyway, I sort of, again, my mind's going, uh-oh, what you thought was safe isn't necessarily safe. But what I didn't realize is that I hadn't done my part. I sort of got into it and then forgot about it. It needed some amount of monitoring.
Yeah,
problem
and
was
a lot
not.
of people get into this using the phrase passive income, and we get to help people understand that, like, look, it's not passive, but it is low maintenance. And I think that's an important distinction. Like, passive is, you do nothing, and I don't even think that's healthy. Like, the best investors are not passive. The Warren Buffetts of the world are not passive. Like, it's their full-time job, like watching those investments and making carefully calculated decisions.
Yeah. Agreed. Thank you.
I think this is very. I think this is very useful. Well, for me it was, at least.
Yeah, for sure. And we're running out of time here, but Andrew, you and I can connect after the fact. But I was thinking we would do these once a month, maybe like second Friday, or we can talk about scheduling and timing and whatnot. But I would like to make this a monthly or more frequent session for people to jump in and not only talk about avoiding scams, but like you were saying, like, let's talk about the psychology behind that and
I
how
think
that
human behavior is
informs
probably one of the
everything.
most important aspects, one of the most unlooked at aspects, in my
Yeah.
opinion. So yeah, let's chat about it. Yeah.
Cool. All right. Well, I
guys,
guess
thanks for
I'm the
coming.
host now, so I'll
Can I say one thing, Brian, just for anyone who does listen to this afterwards?
Oh yeah.
For us to maybe get better next time and improve and give you guys some actual value, if you comment below this training when Brandon posts it, it would be very, very useful so that we can help you in the future.
Yes, for sure. Yeah. All right. Thanks everyone for joining us live, and we'll see you again next time.
Thank you, guys.
Thanks, guys.